Hey everyone, good weekend. This is the weekend report for Sunday, the 30th of April. I'm going to keep this one short and sweet today. I believe that this is the week that we move. One way or another, we are going to move from this range-bound market. What we've seen since last October has been a series of higher lows all the way along, starting in December. A higher low. We had another higher low after the mini bank crisis back in March. And we had another higher low setting up just this week after First Republic. In each case, we've had a higher low to go along with equal highs on the S&P 500 futures. Right around 4,200 is where things are locked up. If we're able to see the price break out above that 4,200 level on good volume, we are going to see a short squeeze from there. As we talked about last weekend, typically with an ascending triangle, I know there's a little bit of religion in this, but typically your measured move is the open end of the triangle, which is 700 points worth. So if you want to go from 4,200 plus 700, we're talking about 4,900 for the measured move for this, which would set an all-time high on the S&P. I know, everybody's talking about a recession coming down the road. All the numbers are starting to turn lower. There's every reason in the world why the price should be lower, but the price is not showing us that. The price is setting up higher lows, and the price right now, quite honestly, is looking for reasons to rally. At least that's the way it looks right now. Now, this week is going to be pretty important in terms of economic reports. Obviously, we have Wednesday is the Fed meeting, the Fed interest rate results. We know that they're going to come out with a quarter-point rate hike, but how do they communicate their forward-looking policy? That's always the case. That has been the case ever since this bear market started. It's not necessarily about the rate hike. It's about their language about future rate hikes. On top of that, we have some pretty important earnings this week along, and then things start to tail off. This is really peak earnings for the quarter right now. We have ADP employment coming along, which sometimes will foreshadow the Friday U.S. jobs report, which comes out Friday at 8:30 a.m. Eastern. Pretty soon, we will start to see the jobs report be the most important report out there. I think the days of CPI and PPI being the most important thing out there are probably numbered because we're starting to see the Fed near peak policy. And if that is the case, then we don't really necessarily care what PPI and CPI, which are trailing numbers, are reflecting anymore. Now, if uncertainty comes to the market, if the Fed boots the ball, and if we have a jobs report which throws confusion onto the whole thing, then we're going to be up at near 4,200, and we're going to be dropping once again to some type of low. I don't know whether it's going to be a higher low or a lower low in this case. So this could create what I've been talking about to this point is a bear trap. But if we have uncertainty coming into the market, and if the Fed really boots it this week, then they will throw uncertainty into the market, and you will see some very quick distribution. All right, that is it for today's Market Minute. Have a great week. We'll see you next weekend.